Hello, everybody. This is Dave with the Compass Options Live Trading Room. This is the weekly Periscope video. Just going to cover some of the trades we made this week, a little update on how we've been trading lately, and also kind of look at the overall market to see where we are on the daily chart on the SPY. So let's get this started. First, I have to do the disclaimer: all signals and trading opportunities provided, both orally written or electronically, are for educational demonstration purposes only. Trading is very risky, and you should never trade with more money than you can afford to lose. Neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, let's move ahead here. This is the weekly review, 11/12. I had some of the latest trades. I took some off. I added some new ones. And recently we've had this Amgen lost on a debit spread on Friday. That cost us 100%. That was a loser. And we had a loser also on Adobe on Friday. That was a call debit spread as well. So both of those kind of went down in flames. But other than that, we've had some really good trades. As you can see here, we had since this month here, we started with Amazon up 9%, AB&B up 25%. We had a 41% gain on Hood, 9% on B&B again, AB&B. Nice 40% gain in Crowd. A nice move in Carvana here for 30%. Snow, we had a put debit spread, which we made 75% on, and another Crowd trade here at 19%. BNTX was a good one. It was a call debit spread for 20%. Rig was also a 15% winner. Pelletier, IBM, you can see them all here. IBM was a nice 15% gain. At Disney, 31% gain on a time spread. Is the Amgen cap call debit spread that we lost on it. It pulled back pretty heavily. There was some problems with Twitter with this verified accounts they've got, and they had some bogus accounts out there for Bristol Myers, Lockheed Martin, some of the other ones. With the Bristol Myers, it knocked down all of the stocks that were related to Lilly. So anything in the healthcare industry took a beat. I had a nice win on Lucid for 20%. Meta, we had 2 wins, a 14% win, a 38% win, and that goes on and on. So we've had a pretty good week. We had a couple of losses in there, but our October, November trades. Right now we've got 53 wins and 5 losses, 92% win rate. So that's right about where we want to be. So it's been pretty good. The highest probability trade setups. We talk about this all the time. One of the things we're going to add to this is to line up the trades with the dominator system to make sure the market internals also agree. So again, looking for a breakout of dynamic compression zones. If you're not familiar with those, I'll show you a couple in a minute. I would look for Fibonacci reversals. If we can get that even adds more conviction to the trade. And again, we want to break out in the same direction as the stock's current trend. So only trading green stocks long and red stocks short. We don't do any counter trend trading. Looking for a breakout in the same direction as the current market trend, if there is one. Otherwise, we just rely on the individual stocks. We're looking for the compass systems indicators to also line up in that direction. In other words, we're looking for the modified Laguerre for the current time frame to match our trade, which would be blue or green for bullish and red or yellow for bearish, and the same for the modified Laguerre for the multi-time frame. And again, I've got videos that you also have access to on finding the highest probability trades using the compass system, and this is all included in that. Bollinger Bandwidth expanding is helpful. Usually when you're breaking out of a dynamic compression zone, Bollinger Band expanding will give you that. And we want to select stocks that have relative strength or relative weakness to the SPY. So those give you also another nice edge. And if it's going to be a swing trade or maybe a swing trade, you want the daily chart to match the trade direction as well. So if you go long a stock on a 5-minute chart, you would like to have the daily chart also be bullish. I tend to only take those kind of trades. And if we get a pop out of the box signal, that adds conviction to the trade as well. And we want to have patience. we wait for a compression break, and that was going to reduce the risk. All right, so let's move on. Again, this is one I keep up all the time for some of the new folks, so they can see what these breaks look like. Again, here's all the compass system indicators: red, bearish. This is a pop out of the box signal right here on Zillow. Moving down, that would be a place to enter the trade as you come across this compression, get a pop out of the box signal, stock goes down, you jump in here and you just write it down. We actually did trade this, get in here and get out here. And again, you can see all the red. This was Oxy. This is one we did a day trade on, but this is the daily chart, just to show you what the setup looks like on the compass system. So here again, we have all green. So this is a bullish setup. This shaded area right here is a dynamic compression zone. So when stocks come out of a dynamic compression zone, either to the upside or the downside, those typically make good entries. So this is Oxy on the daily, and here's Oxy on the 5-minute when we actually took the trade. And again, we actually had a dynamic compression zone here. But you see this pop out of the box signal right here? These pop out of the box signals tell you that they're breaking out of a compression that you can easily see we are here. And you get in here and we rode this up and we get out of this red candle. So again, all green. So everything aligned up. We have a stock that's breaking out of compression. We have all of the gear is lined up in green, telling us that it's a buy. And so that was a nice setup. And Tesla, this is one I show every week, so some of the new folks can see this. Again, this is a dynamic compression zone right here, this shaded area. This is you can see the compression right here. Here's a pop out of the box signal. Here's another one. Now these are Heikin-Achi candles. I just wanted to show an example of Heikin-Achi candles. Heikin-Achi candles are made up of 2 regular 5-minute candles combined together, basically. So when you get a Heikin-Achi reversal, what you do is what you're looking for is a tail on the candle and then a flat bottom. And as long as the flat bottoms continue, just like you're seeing here, every flat bottom tells you that the stock is trending up, trending up, trending up. And here's where you're getting a little bit of a pullback. So you would get in right down here, which we did trade, and get out right up here. And these big green dots in the middle of these candlesticks are called acceleration dots. And those tell you that, as you can see, all of the compass was green here. This tells you that the current time frame, like here, this line right here, is maxed out at 100. 100 is as high as that can go to tell you what the momentum is. That's telling you you're getting the maximum momentum off of the Laguerre here, which is what's telling you that there's a lot of institutional buying coming in right here. This is a SPY. This is a little different representation. I show this each week. This is a short, obviously, on the SPY. You can see these are Heikin-Achi candles. You see the wick followed by a flat top, flat top. These are bearish trending candles. This right here is the Bollinger Band width, which I just wanted to show. As you can see, as the stock breaks out of this compression, the bandwidth expands. It's getting wider, and that tells you that you're breaking out of a compression. These would show a wider band whether you're going up or going down, but they do tell you that you're having a breakout of compression. We can see it clearly. We would ride these candlesticks down. We have flat tops all the way down, and then we would get out here as the stock loses momentum. And you can see the Laguerre switches to blue over here as it goes from bearish to beginning to show bullishness. All right, this is another one on the SPY, same thing. Stock breaking down here. This pink line is the VWAP. Volume weighted average price is something that's very important to have on your 5-minute chart. And as the stock breaks down below the VWAP, it becomes a buy. And you can see you've either got yellow or red, which is all bearish. Stock breaks down, and these are Heikin-Achi candles again. You can see the flat tops all the way down, and then it starts to lose a little bit of momentum right here. You see the candles get tiny, and you're not getting the move down that you want. So once you've got in here and you start to see this, you would consider getting out, and then you obviously would get out as the Laguerre turns blue, and tells you that the downtrend is losing momentum, and you notice you're below the VWAP the whole time. All right, this is Meta. This is another trade we took. This is a daily chart on Meta. Just wanted to show the dynamic compression zone right here. See, everything goes yellow or red right here on this candle as it comes down, and this would be one that you could trade like overnight off of this candle, which we did actually, and you can see that it went down for a couple of days. Again, coming out of a dynamic compression, bearish setup, big red candle, and that's a nice setup on Meta. This was A, B, and B. This is one we've done recently here. And let's see, when did we do that? Got it here somewhere, A, B, and B. Yeah, it was 11/11. This was one we did just recently. So we did this one. Yeah, I'm not sure exactly where we took it, but this is a daily chart, A, B, and B. This is the 11th, but we actually took the trade right here. We did an intraday trade, but you notice on the daily chart right here that we've got it switched all red and yellow right here, and this was earnings, and we actually took this on this day right here, and we just did an intraday trade on it. All right, so and again, so you can see the breakout of the dynamic compression zone here, and stock moving down. This is a daily chart, but what we want to do is we want to be trading in the direction of the daily chart. Now it's reversed here, but we're long out of it from here. So this was Meta. This is when we actually took long. We took it a couple of times this week. We did this on 11/9, which was right here on this candle, and we took it overnight and it went right up here. We got a nice, really nice gain on Meta. Meta was an excellent trade. We got in $7.86 on the calls, held them overnight, and get out at $10.85 the next morning. $3 gain. Pretty tremendous overnight trade for us. And again, this one here on the daily, you notice it was still red on the multi-time frame Laguerre, but the current time frame Laguerre had gone blue to green. And it's the reason the multi-time frame was so red was because of this coming down. So what we did was we entered it, assuming that we were going to get it changed to green, which we probably will here. But this was a nice move up right here. And the daily chart was extremely strong on Meta. All right, crowd, same thing here. We took crowd short. Crowd we took short. Go with it. 11/4. Okay, right in here. Took crowd short right here. Day trade on this one, I believe. Nope, we carried it overnight. We get in over here on the 4th, and we waited till the next morning and then get out. So we get in here on this breakout of dynamic compression, took it overnight, and get out on this particular candle right here. Notice all red, breaking down, dynamic compression breakdown. Nice, really green, reddish candles coming down here, red tops on all of these things. A nice bearish trend, and then it's kind of chopped around and starting to move back up again with the strong market. But this was a nice move right in here. IBM, another nice one we had. We traded this past week. We got in on the 8th on this one. We carried it overnight. IBM, we get on the 8th, which was right here after earnings. No, that was the dividend. We got here on this right here is when we get in. We held it overnight for 2 days. We had a nice move up here. We didn't get a good move the next day on the 9th, but we held on to it because the setup was very, very nice. We're coming out of dynamic compression. We felt as though we had acceleration dots. We had green and blue across the board. So we held on to it, and it paid off the next morning. Moved up for us very nicely on that IBM trade. And that was good for about 15% on the option. So that was a nice trade as well. Just some examples of some of the trades we've taken while we took them. And these aren't showing the 5-minute candles. This is all the daily candles. I just want to show the construction of the daily candlesticks for setups that we take. And Lucid, obviously we took this one short, and not hard to see. Again, this is on 11/9. We took this off of this candle right here on Lucid, and we just day traded this one for a 20% gain off of this candle. We could see it breaking down high dynamic compression. We get in on the 9th and get out on the 9th. So this was a very nice trade. I think some of the folks in the room actually played this a couple times during the day. I just wanted to, this is a SPY for the year so far. Again, you can see that we've went down. This is the low for the year right here. We had set up here at the 200-day moving average. This was a lower high from previous highs, and we came down, 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 and we set in a new low right here, and now we're moving back up again. Moved up to the 100, pulled back a little bit, moved back up to the through the 100, and we've got the 200 above right here. And what we're looking for is we want to see if we put in a higher low. This is a low. We're looking to put in a higher low. If we put in a higher low and this breaks above the 200-day moving average and gets above this level right here, then we would probably consider that we're perhaps breaking out of the bear market. But what's also likely is we're going to move up to the close to the 200-day, get there and roll over again and set down another low, because this is what we've been doing all year. So you have to be very cautious with your longs up around here. I mean, the market's set up long right now, just as it was over here. But again, you want to be very cautious about this, because the market is very susceptible to news, Fed statements coming out, things like that. But as long as we'll be trading, and if this continues. All right, so let's talk about the dominator system a little bit. This is the dominator system, the system that looks at market internals. And what we've got now in the room is we're trading the compass system to let us know when the institutions are buying or selling, so that we can join them, or when they're not, so we can avoid those trades. And this tells us what the market internals are. Market internals on the dominator system are looking at 5 different indexes. They're looking at the Dow, the New York Stock Exchange, the New York Stock Exchange, the Qs, the Qs, the SPY, and the Russell 2000. So it's looking at across all those 5 indexes. And what it's looking for is it's looking for number of stocks moving up on up volume and upticks versus number of stocks moving down on down volume and down ticks. And that's what's called market internals. And that feeds to this through a kinetic data feed that goes into our Ninja 8 platform. And it's going to show down here each of those indexes and what they're doing as far as red, green, or neutral. And when the market internals show a large disparity in stocks moving up versus stocks moving down, or stocks moving down versus stocks moving up, you're going to get signals on the trade. This is the SPY. So you notice how it went from a black background, but which is neutral, to a light pink background. This is bearish, and this was your first sell signal right here. And this is where you could take it off of this pink background and write it down. And then it goes back up again, and you could get in again as it breaks down again. But this is what you're looking for, is you're looking for a background that matches the direction you want to take. So light pink or dark pink for bearish, and light green or dark green for bullish. You want to get a signal in here. As soon as you get a signal, that tells you that the market internals are also in that direction. So you'd get red signals, red sell signals, anytime the market internals were bearish, and green buy signals anytime the market internals are bullish. And it basically tells you that this is the direction the market is likely to go. See, there's a lot of chopping here, but it's giving us sell signals, which means there's a big enough disparity in number of stocks being sold, well, moving down on down volume and down ticks, compared to the stocks moving up on up volume and up ticks, that you're going to get the sell signal of that. And what you would do before, of course, before you took the trade, is you check your compass system and make sure, in this particular case, we're looking at the SPY, you would want your compass indicators to be red. Okay, this is a bullish version of that. Again, you've got light green, or looks bluish to me, but it's light green and dark green. This is all bullish. And you notice on the market internals, as soon as they go all green here, you get a buy signal right here. And you notice the buy signals just keep on coming. Now, one of the things you want to be very careful is when a stock is on buy signals and gets extended like this, gets away from any of your support levels, you don't want to be chasing it. You want to catch it like here, or on a pullback like this, or on a pullback like this. Right here is like a perfect entry. And as long as you're getting these green signals, you know that you've got market internals in your favor, and you can get in and ride it right up. Just like this, you could have ridden it up, and when you get a red candle, you can take profits and then look to get back in again. But again, you notice the big disparity on stocks moving up versus stocks moving down. And of course, you're getting buy signals across the board on this. And when you get these buy signals, you can also take any kind of stocks long you want, as long as they've got green backgrounds here and they line up on the compass system. But the key is to try to get into them at a support level. And another, this is Netflix. This was another nice trade right here. Again, you notice this is all green, and here's your buy signal. and you can just ride these. You could, I mean, you can stay in it when it's like this. You can just ride it up. There's probably no way I'd be in it all day. I'd probably be out. If I was in here, I'd be out here, and if I was back in here, I'd be out back up here. But you can ride these things as long as you're getting buy signals. So what we're looking for is the compass dominator combo. This is what we're looking for to get the very highest probability trade setups. So if on the dominator, if you've got a background that's green, and you also have dominator buy signals, and the compass system lines up green with it, then you can take longs, and you can take a larger size, and you can stay in the trade longer generally, is because you've got the market internals and the institutional buying in your favor, and vice versa on the bearish. You are going to have a dominator background red and dominator sell signals, and you've got the compass system red on that particular trade. You want to make sure it is. Then when you've got those elements in your favor, you can actually probably take larger size on the trade and stay in the trades a little longer. Now it helps if the market is trending when you're taking these larger sizes. You'd like to have the stocks and the stock market in a trend to the upside or to the downside to match your trade, as opposed to choppy. Choppiness makes it a little more difficult to stay in the trades long, and I would not be putting as big a position size on if the market was choppy. But the trending markets with these particular criteria makes it really, really advantageous to take bigger size. And again, we're looking for the best entry levels for trades when the dominator aligns, which means obviously the compass system needs to either be green or red to let us know the institutions are buying or selling. But you want to take you want to enter with like a bounce off the 15 EMA or a bounce off the VWAP, or if there's a white pivot point, a bounce off of that, or a break out of the dynamic compression zone. In other words, getting in, we want to be able to enter these trades at support. And if you're taking them short, it would be just exactly the opposite. The stock would have moved up to the 15 EMA and rolled over, moved up to the VWAP and rolled over, or broke below the dynamic compression zone. So we're trying to get in to the trades we want to buy at support and sell at resistance. And that's always a good rule to follow: buy at support, sell at resistance. And I'm going to skip this. This is a put credit spreads. I got a video out on that. Also, I have a day trading post, a post in Reddit on doing debit spreads, a profitable day trade. I've got all of these as videos, so you all have access to those. I can actually candles, and there's a link to all my compass videos. And what I'm looking at for tomorrow, this is Sunday night, so I'm looking at this for Monday. And these again, these are potentials. ASML for bullish, Caterpillar, LRCX, OVV, wheel stock, Tandem, Snap, and WBA. These are all the ones I've got on my watch list for bullish in the morning, and these are my bearish ones right now: CBOE, NRGD, MRK, and LPLA. Those are the ones I'm looking at right now. The market is down a little bit. It's about midnight on Sunday, and the market's down about 73 points on the Qs and about 13 on the SPY. But so this is what we're looking at in the morning. And if you enter these, what you want to do is for longs, you want to make sure that they're breaking over. This will be Friday's high. They're breaking over Friday's high with a high probability trade setup. For shorts, you're looking for short entries, break below Friday's low with a high probability trade setup, and try to take the trades that are trading in the direction as the market. So that's all for this week. And again, appreciate everybody that is subscribed to the room. I appreciate everybody being in the room, and look forward to seeing everybody on Monday morning for another profitable week. Have a great one.